Okay, hi everyone and welcome to our webinar again. I'm just waiting for a few more participants to come on board. It's nice to see everybody here already. We've got a big house today, Ken.
We do.
A
lot to talk about.
All right, everybody, thanks for joining us. So today we're going to be talking about the JobKeeper what do we call it? JobKeeper legislation that's just come out over the weekend. Yep. Ken's going to take us through this. Ken is from Small Business Australia, Self-Employed Australia, who's going to be taking us through this today. So this is just a really quick introduction, and I think, Ken, I'm going to pass over the reins to you now that everybody's on here, and because I know there's a lot of information. So just a couple of housekeeping rules, you guys. If you've got any questions, feel free to just bring up the chat down the bottom and press the questions below. I'm also going to share the link for what Ken's going to be discussing today in the web chat. So if you want to open that in a different screen, that's going to allow you to see the different items in the article that Ken's going to be talking about today as well. And of course, feel free to post any questions. I'm going to pop on at certain times and ask those questions just to keep the momentum going as well. Okay, Ken, I'm going to pass over the reins to you to get moving. Thanks, Ken.
Good. Okay, terrific. Now you will need to open that link that Susan has sent you, or you will have no idea what I'm talking about. So that's the link on the Self-Employed Australia website. And so specifically, I'm talking about the JobKeeper program, and the items that I'll be going through are items number 2, 2A and 2B, which is all of the JobKeeper summary, and we've put those in purple heading to make it even clearer. Now, just to give you a background as to precisely what's happened, the webinar that we did the other day went through the general issues and what was available, and on Wednesday, the Parliament sat and passed the legislation to enable JobKeeper. Now, it's about 5 different pieces of legislation with all the explanatory memorandum. And then a really interesting thing in it, which I've never seen before, is that the legislation authorised the Treasurer to make more legislation. So the additional legislation was released by Treasury on Saturday, late on Saturday afternoon, and with the explanatory memorandums for that. So what we've been able to do is get all of those, about 5 different pieces of legislation, get them all together, summarise them, and that's what we've done here. We've summarised a whole lot. Treasury also put out some very, very good fact sheets, and we've got those linked in here as well. So I've had some accountants check this, etc., and some lawyers. We think we've got the information correct, and we've pulled it all together in one thing. If there's some errors in there, and if anyone finds some errors, please let us know. But I'll take you through now. So we think we've got the whole thing covered and summarised here. So the first thing to do is we've put up there a guide to what you will get per fortnight, and what we've done is compared the job seeker to the job keeper. So the job seeker you apply through Centrelink. The job keeper you apply through the ATO. And the job seeker, there you can see that there's the original base rate of $565. That's for a single person without children. Then you add the coronavirus, the $550 to it. That's $1,115 a fortnight. It is taxed. The approximate tax on that, depending on circumstance, $100. So there you are. There you are, you get about $1,015 in your hand per fortnight. You compare that to JobKeeper, and it's $1,500 straight. Tax is about $192, and you get $1,300. So about a $300 difference between the 2 schemes. Of course, with job seeker, you can still earn $1,000. JobKeeper, you can be paid more if your business can pay you more, but I'll take you through that in a minute. So you can see there's some rough comparisons for you in terms of what each is actually worth. The important thing with all of this is, from the self-employed perspective, we're eligible for JobKeeper. I'll go through the detail, but it applies to us in all the various forms. I've got the details here. So that's a great thing. The government has recognised us this time in terms of making sure that we've got the support underneath us in this area. So if you roll down to number 2, JobKeeper income support. So here are the general rules which apply to everyone. So it will then split into 2, which is what happens if you have employees, what happens if you are only a self-employed person. But here are the general rules that apply. So the first thing is that your turnover has to drop more than 30% or more. Hopefully, a lot of us don't qualify because the turnover hasn't dropped that amount. If your turnover's dropped 20%, of course, that's a big kick in the pants for everyone, but you don't qualify for JobKeeper. The process of the declaration is fairly straightforward. It's declared based on your GST turnover. So the forms are not yet up on the ATO website. So understand that you can't actually make an application at the moment. You can, still on the ATO website, when I looked late yesterday, you can register your interest, but the forms aren't actually there. So understand that you've had you've had your, I've lost my train of thought. Hang on, I'll start again. The assessment of what you've earned goes back to 2019. So here's what occurs. If you look at your income for 2020 in March, compare that to March 2019. If you've dropped more than 30%, you're eligible for JobKeeper. End of story. If your income hasn't dropped more than 30% in March, you can then look at April. And if your April income has dropped in comparison to April 2019, you're in. Now, if you're not eligible in the March period, and it means that you don't get the March subsidy. If you're then eligible in April, it means that you get the April subsidy, but you won't get the March. One of the important things in this is as soon as you are eligible in any 1 month, you are eligible for the rest of the 6 months. So you don't have to prove yourself again every month. So if you're eligible in March, you will then get March, April, May, June, July, and August. So you'll get the full 6 months. If you're eligible in April, you'll then get April, May, June, July, August. You'll get 5 months, etc. So even if you're only eligible in August at the very end, you'll get the August payment, which is $3,000 per head. So you do not have to reprove yourself. You do have to report monthly what your turnover is, but that reporting is only for statistical data collection by the government. So if your income or your turnover increases in, say, May, you'll still continue to be eligible because you had been eligible in March or April or whatever it was. So there were some fairly key questions and issues that we had around this. In actual fact, when you look at it, it's very, very generous. The income doesn't include any overseas income, so it's only in Australia. It's all verified back against your BAS statement. So that's your key point. So you can look at your BAS statement for the quarter or the month, and you can look back. Did you have some questions there, Susan?
I do.
Yeah.
A question from Karen. What if you are not registered for GST? So you don't put in your quarterly BAS because you're not registered. Karen, do you do your PAYG, which is quarterly?
Okay, there are two processes. They've got two processes. One they call the basic, and the other one they call the alternative. So the basic one is the one I've just described, which is where the bulk of people are going to come in. They then talk of the alternative being people who have got a new business. So if you've only been in business for 6 months, you haven't got a 12-month comparison. They talk of people who have got lumpy income, comes in bits and pieces all over the place. So all these sorts of variations. What you're able to do is apply directly to the ATO, and they will look at your individual circumstance. So what I would say, if you're not doing GST and it's still dropped back by the 30%, don't give up, go and talk to the ATO. Now, remember, we don't have the forms at this stage and they've got to process them all, but I'd absolutely say don't give up. Yeah.
Okay. Now, the other question from Serena is, how would the ATO pay sole traders when we don't pay ourselves via a payroll, i.e. we just take the drawings?
Let me get down, I'll jump down to 2A in a second, where we'll get through all of that stuff. So the big question a lot of people are asking, it is paid in arrears. So you're going to have to be able to fund that first month where you're eligible. This will become more important with the employees. So you must, if you've got employees, you must have been paying them. I'll get to that later on, but it is paid in arrears. So all of us are going to have a cash flow management issue for the first period on this. The government has got in their information thing on that. What if you've got a cash flow problem? They said, go talk to your bank. Now, the government is talking to the banks. My view is that if you go to the bank and say, look, I'm eligible for JobKeeper, here's the information, I need X amount of money, I think you're going to get a very good response from them. So that's the response from the bank, from the government on that. Go and talk to your bank. The other issue is that an individual can only receive the JobKeeper once. There is absolutely no double dipping here. So you can't get it twice from different companies. That would fall into a fraud category, and they are being going to be pretty gung-ho on that. So essentially, that will mean that your payment will be tied to your tax file number. So if you're getting two JobKeepers under your tax file number, I'm pretty sure the government will find, or the tax office will find out pretty quickly. Moving down to 2A, if you don't have employees, that's all of us self-employed, it's really pretty good. So the first thing is that you must have an ABN before the 12th of March. If you don't have an ABN before the 12th of March, bad luck, you don't qualify. It doesn't mean that you have to have GST, you have to have an ABN. Your turnover is based on your last tax return, and you have to have had that tax return in by the 12th of March. So if you're late getting in your tax return, you've got a problem, but they are giving some level of flexibility, and you can make application to the ATO to extend that deadline on a case-by-case basis. You have to supply your tax file number, and it's paid to you by the ATO every month, as per with everyone else. Now, the important bit here is which of the categories. So if you're a sole trader, you are eligible straight away if you prove that your income has dropped to 30%. If you're a partnership, the partnership is eligible, but only one partner can get it. If you are a company, only one of the directors can get it. And if you are a trust, only one of the beneficiaries of the trust can get it. I've got to say, this was one of the big unanswered questions before, but they've really gone and covered this off. I've also received information through, and this is not in the government documentation I've been able to apply, but the advice that I've received through from ministerial advisory level is that if, say, you're working through a company structure and one of you is an employee of the company, or both of you are an employee of the company and one's a director, you can get the JobKeeper as a director, and the other person can get a job, the JobKeeper, as an employee. So that I'm pretty sure of. The advice I've got on that's pretty strong, but I'll be checking on that one. The key thing, however, is that no one can get it twice. I'll stop there, Susan, and see if there are further questions. Hopefully that's now already answered a fair few.
And no further question. Oh, hang on. How do you work out the downturn if they were basing it basing it a whole year for last year?
Oh no, what they do is they'll look at month by month. Now I'm looking at whether or not I'm eligible, so I'm going back through my turnover month by month. We have lumpy income. We are down. And so I've put together a spreadsheet looking very simply what was my income in each month, and then I'm doing the comparison back against that. So what we've got to remember here is that we don't have the forms from the ATO available as yet. So we don't quite know how they're going to express this in the forms. The legislation makes it clear in terms of what information will need to be provided, and that's quite clear. So you've got a number of things here. You've got your BAS statement based on GST, that will give evidence. You've got your tax return that you can rely on to give evidence. You've got your own spreadsheets, your own cash flow thing of this is how much money I got in the month. A lot of the things with for example, with the BAS statements, of course, the BAS statements don't take account of bad debt. So if you've invoiced someone in this month and they don't pay you and you've got a bad debt, of course, then you've got a less income this month than what you'd originally shown. So I'm pretty sure, and these are a few of the areas that are still open for question, but I think once we get the forms available from the ATO, a lot of these issues will probably be resolved. Just this morning, the ATO sent out I get their regular links, how terribly interesting about details of tax stuff. But one of those links this morning was, how do you handle bad debt? So they're developing these things. I'm expecting that sort of stuff to be covered off reasonably soon as the forms become available. I think that the forms are likely to become available this week. They will certainly need to become available next week at the latest.
Okay, a couple more questions. Do we pay our PAYG for this quarter by 28th of April and BAS?
You continue to do your PAYG and your GST payments absolutely as normal. That doesn't change. So there's no offsetting. JobKeeper doesn't offset against your tax debts. You have to treat them separately.
Okay, and what happens if you have not earned any income at all? Are you still eligible?
Any income in this month in compared to last year?
Well, Helen, if you could just clarify that would be great. Whether it's comparison to last year or whether it is comparison, like if you are brand new business.
I'll give an answer.
Yep.
If it's for say you didn't have any income last year and you've started a new business, this is the one where you will then, this is the alternative system, and you will make application to the ATO and explain your circumstance. So if your business has only been operating 2 months and you actually had or 3 months and you had, say, a good 3 months, but then it's collapsed subsequently and you've got a reasonable case to make the case.
Yep. Okay, a couple more questions. So the subsidy, Frank's asked, so the subsidy, if qualified, is payable from the March 1st or the 30th of March? It's 30th March.
Right, I've got that in here somewhere.
30th March, but employees need to be employed full-time from the 1st of March.
So there's a delay in the payment schedule. So let me see. The March payment will be made in the first week of May. Right?
Is that paid from the 30th of March or from the 1st of March? I thought
1st of March. It takes in the full month, yes.
Okay, because I thought it was the other way, that employees need to be employed by the 1st of March, but it wasn't paid. It's paid from the 30th.
Right, you will get the March payment in the first week of May.
Mm.
So the job subsidy scheme operates for 6 months. So it's March, April, May, June, July, August.
Okay.
And the last payments will be made in the first week of October.
Okay.
So everyone's effectively got really a 2-week delay in getting the money, a 2-month delay. So you've got March, you'll need to have paid people in March. You won't get the money in April, you'll get it in the first week of May.
Yeah. Okay. Because I thought it was, sorry, just clarifying, because I thought it was starting from the 30th of March was when they were back paying it to, but it's the 1st of March, is it?
It's the 1st of March. They're back paying it to the 1st of March. I'll just there's actually a schedule which I haven't put up here. There's actually a schedule in the legislation showing the dates.
Okay.
But yeah, it's the first March. It's funny when you get.
Sorry, I know.
No, that's cool.
There's been so much information around it, and they're saying like employers need to be in. If they're not signed up by the 1st of March, they're not eligible. But then they're saying like it starts on the 30th of March. But hang on a second, now it's the I don't know. Right, 1st of March. Let's go with that.
And I'm hoping that I'm not getting myself confused. When I wrote it all and I double check, I get it all correct. I'll go, I can check this out. When we start talking about it, I start running around in circles. So, but hopefully.
Okay. So we've got quite a few more questions. So hang on, so Mary Jane's asked, lodgement of 2019 tax returns is one method required. The ATO will also accept if the business made taxable supplies between 1st July 2018 and 12th March 2020 and has lodged an activity statement for this period. Is that correct?
Hang on, say that again. That was a fair bit.
Okay, so lodgement of 2019 tax returns is one method required. The ATO will also accept if the business made taxable supplies between 1st July 2018 and 12th of March 2020 and has lodged an activity statement for this period. Do you mean 1st July 2019, Mary Jo?
Look, let me go through to B, and then we'll see how we go. See how we go here. So here's the area now. If you're self-employed but you have employees, 2 or 3 employees or more, you have to report the employee numbers as they were standing of the 1st of March. Anyone who's employed after the 1st of March is not eligible. Anyone who was. So the people who are eligible are anyone who was stood down but you've rehired since the 1st of March. So if you stood them down before the 1st of March or if you stood them down after the 1st of March, but have rehired them, they are eligible. They have to be 16 years or older, full or part-time employees, or casual employees who've been engaged by you for more than 1 year. So if they're being engaged, less than 1 year, they're not eligible. Now here's the big issue about what is casual employee. They have to have been engaged on the term they use in the legislation is regular and systemic. There's an issue about what regular and systemic might be. And so here's the thing, one of the questions being put to me, if someone was working 1 week a month on a regular basis as a casual employee, are they eligible? It appears to me that they are, and they'll get the $1,500. So it's really quite generous in that respect. But there is, we have to warn, there is a question about regular and systemic. So there has to be a set pattern in the whole thing. They have to be an Australian citizen or holding very specific visas. Again, you can't double dip. It's not available for any new employees after the 1st of March. And this was an interesting one I found in legislation. It says you have to include all eligible employees. You can't pick and choose. You can't, if an employee is eligible and you've got 5 employees, you can't give it to 4, you have to give it to the 5. So it's $1,500 a fortnight. It's absolutely essential that minimum $1,500 must wind up in the hand of the employee. you can't pay them less than the $1,500 or you will be breaching this. If the employee is earning more than $1,500 a fortnight and you're paying them more than $1,500 a fortnight, well, the $1,500 subsidises that as long as they're earning more. The issue that was interesting is if someone was earning more than $1,500 a fortnight and you're only getting the $1,500 of the fortnight in, do you have to pay them more? Well, the answer is no. You can pay them just the $1,500, and but you can't pay them less than their usual and normal hourly rate. Now, I've given down at the bottom of 2B the specific extraction there from the bill itself. So, and I've given an example of how that appears to apply. So, someone was earning $3,000 a fortnight for a 35-hour week. It turns out that that's about $43 an hour. If you've only got them on the JobKeeper arrangement at $1,500 a fortnight, it means that you can only have them working for, or require them to work for 35 hours in the fortnight. You can't drop below that hourly rate, the $43 an hour that they were earning. This is all subject to tax. Both the JobKeeper and job seeker are subject to tax, and so you have to do the normal PAYG withholding arrangements on the $1,500. The other aspect of this is that you have to give a notice to all employees that you are applying for the job seeker or intend doing the job seeker, and they must agree in writing back to you to be part of this. Again, the forms are still not available on the ATO website, but they will have, it would appear to me that they're going to have some standard forms available through their website. On superannuation, you don't have to pay superannuation, the additional superannuation on the $1,500. That's up to you. The issue of tax, payroll tax, workers' compensation premiums, most states are giving relief around payroll tax if that applies to you, but it's quite clear here, you will need to be paying the workers' compensation premiums on that $1,500. I haven't seen anything that suggests that the state governments are going to give any sort of relief on the payroll tax. I haven't seen anything on that. This applies under the labour, if you're engaging people through labour hire or running a labour hire business. The JobKeeper arrangements apply to a labour hire company as if they are the end user. It doesn't apply to the end user under labour hire. All the provisions apply to the labour hire company. And just the last point there, if you've got apprentices, you can't have an apprentice on the JobKeeper scheme and the wage subsidy. So they've got an additional scheme here for apprentices, subsidising apprentices. You can't have them on both. So again, here, this is the principle of not being able to double dip and not being able to take it twice. I'll stop there, Susan. Let's see how we go with questions now.
Okay, so we've still got a few questions from a little bit before. So Serena's asked, my last tax return was 2017 to 2018. As we use an accountant, we'll be doing our 2018/19 tax return before June. Can I use my 17/18 return? If not, I will probably have to wait until July VAS to show that my April to June period has zero income.
I don't think you should wait. If you haven't got the evidence that you need, this is the alternative arrangements that the ATO's talked about for people in just your circumstance. Once again, when the ATO forms are out, I'd make sure that you've registered your interest straight away on the ATO website. We've got a link in here. You'll see on the JobKeeper support, apply to the ATO here. That's a link direct into their thing. I'm actually going to have a look at the moment. Yep, you can still only register your interest, but once you've registered your interest, they will send out updates according to the ATO. So get that in and look, put together your information on the best information that you've got available. What was your turnover 12 months ago, month by month? What's your turnover now? Put that together in an honest and verifiable manner, and don't wait. Don't hang around. I'd get your application in as soon as you can.
Yeah, and I think that's just answered your question to, yes, you need to update that once a month to prove that downturn. Is that correct, Ken?
No, the key point, and this is one that I was concerned about, each month you will have to put in a report on what your turnover is. That is only being done for the purposes of collecting data by the government. That's all it is. It won't affect your JobKeeper entitlement. Once you're entitled in 1 month, you're entitled for the rest of the months. So I'll repeat that. If you've obtained proof and an entitlement in March, you will get the payments for the whole of the 6 months. If you haven't had the sufficient turnover drop in March, and it doesn't happen till April, you'll then, once you've got that locked in, you're entitled for it for the full 5 months.
Yeah.
I've got that clear? Yeah. So this is that monthly reporting that you then have to do on your turnover. That doesn't affect your entitlement. It's entirely for data collection for the government, so they can track how things are going.
Now, I had a few comments here from people saying that its eligibility is from the 30th of March to the 30th of September or 27th of September for JobKeeper. And so we might just need to clarify that a little bit more when you're ready, Ken, because it's employment had to be in place on the 1st of March, but the period is paid from the 30th of March to the 30th of September.
Oh, it's paid from the 30th of March.
Okay, yeah.
Based on the number of employees or yourself, the turnover in March. So this works on a fortnightly arrangement, right? So the $3,000 will apply to March. I'm pretty sure I'm correct on that. In other words, okay, you won't get it till May. You won't get that March $3,000 until the first week of May.
Okay.
But the entitlement is for the March period. Now, I'll go back because I didn't put the...
okay. So actually...
What I'm going to say, if there are queries around, I will make a note to go back and check the legislation.
Mary Jo's actually just grabbed it from the ATO website for us. And it says, and I'll actually copy and paste it to all panelists and attendees as well. Yeah. Direct quote from ATO website. Employers will need to pay eligible employees a minimum of $1,500 before tax per fortnight to claim their JobKeeper payment. This will be paid to the employer in arrears each month by us. The first payments to be eligible employers will commence on the first week of May 2020. JobKeeper payments can be made for the period beginning 30th of March 2020.
But it's for the March period. What I will do is I'll dig out of the legislation. I'll dig out of the legislation their payment schedule.
Yeah, and it says if employers do not continue to pay their employees for each pay period, they will cease to qualify for the JobKeeper payment.
You have to keep paying.
Yeah, okay. All right, so I'm actually, guys, if you've got any comments or whatnot, just change in the little chat box to panelists and employees. Oh, sorry, employees. Panelists and attendees, and that way it's not just going to be us that sees it, it's going to be all the attendees on the webinar too. So thanks Mary Jo, I've just actually popped that in there as well. So just a couple more questions. So Lisa's asked, Lisa, hi, it's been a long time since I've spoken to you. What if my income is not down year on year, but I did lose a lot of money with new jobs that were cancelled for this month? So yeah, it goes on the month to month. Yep.
If you can't demonstrate it year on year, March this year to March last year, again, put into what they're calling their alternative arrangements. Again, the forms are not on their website, but I would be going and getting your data, putting the data together and seek to make your case.
Okay, and then, oh, an anonymous attendee, I like that. If we have had a drop of income but are receiving a small income via another source, would we still be eligible for applying for JobKeeper? Small income from another source is not business or work related. Would that depend on whether the other employer is claiming that for them?
Let me see if I think through the question, because I'm not completely clear on the question. So
they've had a drop of income, but they've had a drop of income, but they receive. So are you actually self-employed, anonymous attendee? Is the question. I suppose that would be if they're self-employed or if they're in a business. Obviously, they're sort of. Are you receiving a small income via another source, so a job, and then you've also got your small business income? Are you?
Okay, I'll see if I can address
small
that.
Income from another source. Yeah.
Okay, there's a situation. If you're self-employed, but you're also working as an employee somewhere else, and that employer's income has dropped and they are applying for JobKeeper, you can be eligible for the JobKeeper through the other employer. You can't then turn around and also claim it as a self-employed person, because you'll be getting it twice.
Yeah,
which just remember, you can't get it. You can't. You can't get it twice under any circumstance. So you have to apply one under one arrangement or the other. Hopefully that might address the question.
Hopefully, we'll come back to that one. Chong's asked, using the 3,000 per fortnight example, does that mean if the employer still wants the staff to work 70 hours per fortnight, he will continue to pay 3,000 per fortnight with subsidy of 1,500 from government? Is that
correct? Correct.
Okay.
You can't, under any circumstances, be paying someone less than their hourly rate. That's in amendments to the Fair Work Act. So the legislation was in two primary parts, one in terms of the arrangements covering the ATO administration of this, and the other was amendments to the Fair Work Act to enable all of this to occur for the 6 months under the Fair Work Act. So it's under that piece of legislation. You cannot pay them less than their normal hourly rate under any circumstances.
So the anonymous person has come back and said that they're not an employer or an employee. They are self-employed, but they also receive a small pension. So are they still eligible as self-employed to get the JobKeeper?
But if you're getting a government pension, you'll need to go and make an inquiry under Centrelink, because there are specific rules regarding pensioners and both job seeker and JobKeeper. I'm not sufficiently familiar with those to be able to give an answer, but you'd need to check on that. I have a suspicion probably not. If your only income is from a pension, I doubt that it depends if it's a government pension or a private pension. It would just depend.
Yeah, it's also self-employed. So yeah, I suppose it depends. Apply, see how you go.
You put your case together and put in an application, and as long as you're being clear, you're not withholding any facts, there'll be all these sorts of issues on individual people that the ATO will have to handle. So just put your facts together in as clear a manner as you can.
So Annette's asked, I filed a tax return for last year. Do I still have to provide monthly income to the ATO?
Yes. So for the 6-month period. Only for the 6-month period while JobKeeper's operating, yes.
Okay. And then Merjo, I'm not sure if this is a question, but you've just made a comment. Red dividends and interest are not counted for turnover calculation.
If you're self-employed, that's the totality of my interpretation, the totality of your income. So if you're getting income into a partnership or a sole trader or a PTY, and it's coming from dividends and it's coming from whatever, income is income. Turnover is turnover. The word they use is turnover. So if it's coming in, it's coming in.
Okay, and we're
There's no exclusions on what is turnover that I have seen in the legislation.
okay. So Annette's just asked, I also receive part government pension plus some from my super, and I work as a sole trader. Do I still qualify? And if yes, which one? So do you mean which one as in JobKeeper or job seeker, or which one as in which you?
Yeah, look, again, I think the key to this is that when the ATO forms are available, you declare your facts.
Yeah.
So put all of the information in.
As Ken's mentioned in the previous webinar, JobKeeper is worth more than job seeker as well. So yeah, put that together. Okay, I think we're at the end of our questions for now.
Okay, good. Well, I'm at the end of my carrying on because I think I've gone through 2A, 2B, and 2C. Hopefully, I didn't get too confused and confuse everyone else, but I will go and check that payment schedule. And Susan, perhaps if I send that through to you, I've got to find where in the outline of legislation it lives. I think I've got it there somewhere. But I'll send that to you. You might want to send that out to everyone.
Yeah, I'll send that out with the recording. A couple more questions actually just come through last minute. So Liz just said, I work casually and have been stood down. They will not do JobKeeper. Do I include that in turnover?
So if let me get this right, the company that you worked for casually, their turnover hasn't dropped the 30%, so they're not eligible, so then you're not eligible through them.
Or their turnover might have dropped, but they're refusing to do JobKeeper because they can't afford to.
Oh, well, they've closed down completely or whatever it might be. So that's up to them as to whether or not they apply.
Okay.
So if you've been self-employed and your income, however it's come to you from them or whatever else it might be, you could. I'd still be applying as a self-employed person.
Okay.
If you're being self-employed, if you can demonstrate that you're being self-employed.
Lisa's also asked, do I include the past wages into my turnover? My thoughts would be that that's employed wages rather than a business turnover.
Yeah, look, if you're a sole trader but have also been working as an employee, again, what I'd be doing is once we see the ATO forms, make sure that the declaration that you put in is clear about what the income is. Right? So if you've had income from a pension, or once again, we haven't seen the forms, so we don't specifically know what the forms are going to say. There'll be a lot of people in this sort of situation where you're getting it from different categories. So again, we don't know the detail of the forms, but prepare your information and just be as honest as you possibly can about the situation.
Yeah. So Liz has just asked, I'm a sole trader and have registered my interest with Centrelink. That'd be for job seeker, Liz, and she's had a phone call for them. When I go into MyGov website, there is only job seeker option. I'm just wondering what others see when they log in. Yeah, it's with the ATO, the JobKeeper,
yes,
and you have to go to ATO for JobKeeper.
Yes, and you'll find that if you have a look on our the link that you've got our website, where we've got even on each of the things there, we've got the if you look under 2A JobKeeper income support down the bottom there, you'll see apply to the ATO here. Click that. That will take you directly through to the ATO application site.
Okay. Serena's asked, how would the ATO pay sole traders when we don't pay ourselves via payroll? We just take drawings. That's
what they've covered us off for. They've finally recognised the role of self-employed people in the community. There's only a little over 2 million of us. That's all. So, really, I've got to say, this is one of the first times that I've seen that they've truly turned around and gone, okay, we get it. Self-employed people, you've got a situation, we can't let you fall through the gap, and so we're included. Absolutely.
Yeah, and so Serena's also asked, so if the employer hasn't paid the first $1,500 by the 12th of the 4th, they will miss out on that first fortnightly payment. And on top of that, if self-employed, do we pay ourselves that first 1,500 to actually make that eligible as well?
I can't see that we are required to have this sort of funny, silly paper trail where we pay ourselves and then we get it back sort of thing, right? Again, we haven't got the forms, but all we're needing to do, and look, the logic of this is, of course, we, as a self-employed person, we pay ourselves in lumpy arrangements when we've got the money. So, some months we often don't draw something down to us, but if you're a sole trader, it's all in the one bank account anyway. So no, look, just put in the application as a sole trader. You've got the 4 categories there. You apply under any of those. Again, we don't have the forms, so we don't know what those forms are going to look like. At this stage, get your information prepared. If it's an employee, you have to have paid the employee.
And that's on the one-touch payroll system, isn't it?
You've got the one-touch and all of those, yes. Yep. One-touch or manual, yeah.
So another question, I commenced my business in January 2020 and business has dropped recently. I registered for JobSeeker and was approved, wanting to inform them of lumpy income earned every fortnight. Will I be able to transfer from JobSeeker to JobKeeper as it seems more appropriate for my situation?
I can't see why you would need to apply for JobKeeper, get the JobKeeper, but then you'd have to make sure that you have notified Centrelink and cancelled the JobSeeker. Don't run any risk of getting both.
Is that still valid with January 2020 business start?
Again, this would fall under what they're calling the alternative application arrangements, where they've made a provision for people who have only just started up their business. And what you'll need to do is put together the facts to be able to demonstrate that the business has collapsed. But they've been quite clear in the legislation and the explanatory stuff that they recognise that people can start up a business and then it's all suddenly collapsed on them and they've got stripe as a result. They're just looking for clarity on this.
Yeah. Now, Lisa's also asked, can you get access to the early super if on JobKeeper?
There's nothing. If you roll down to, where are we? Item 4 on the link that I've got you, and we've got the link there to the, and I'll even click that link to myself. That's managed by the ATO as well, and it seems to me that and there was just some stuff that came out again this morning from the ATO on that. Hang on a second, let me see if I can actually.
I've just popped the link back in there for you too, Lisa, in case you want to bring that up as well.
And just give me a second because I've got the ATO link from this morning on superannuation. And
then Serena's asking...
just very, very quickly on that.
Sorry.
There's nothing in the ATO link as I'm scrolling through at the moment that says that if you've got JobKeeper, that you can't access your superannuation or the $10,000 now and $10,000 after July 1. It would appear to me that you can.
Okay, great. And then
again, we've got links there. I'll be updating that link given the information that's just come through this morning as well.
Fabulous. Let me know when you've updated it, Ken. I'll send it out with the recording as well.
Yep.
Now, Serena just said, I thought you had to register your interest in JobKeeper by the 26th of April to even be considered during the JobKeeper period. Is that correct? Or
no, well, put it this way, I'll be registering. So there are a few things here. I wouldn't delay the registration. I wouldn't delay the registration of interest. Get your registration. They cover in the legislation if you anticipate a drop in your income. So you're able to alert them to that. And so they've got all of that covered off in the legislation. So again, it comes back to a simple thing here. if you haven't had the required turnover drop in March, but it happens in April, you qualify from April for the rest of the 5 months. If the required turnover drop doesn't happen until May, you miss out on April and March, but you get May, June, July, August. So you only have to apply, you only have to become eligible once. So if you haven't had the required drop, just keep monitoring, and then if the drop does happen, you can then apply, and then you start to get the money.
Okay, and Helen's just asked, when do employers need to pay employees by in order to receive to be eligible to receive the back pay from the government?
Right, you can't wait. You've got to keep paying them as required. So, and if you've got them in March, you have to make sure that you are paying them in March. So in other words, if you're paying them weekly, you'll need to keep paying them weekly. If you're paying them monthly, fortnightly, you need to keep paying them fortnightly. If you're paying them monthly, they've made provisions that if it's a monthly payment, you can keep doing it. I forget what the rules were around that. But yeah, you have to be paying them on the knocker. And if you've got a cash flow issue, as the government's advisory said, go and talk to the bank.
Okay, any other questions? I think we're caught up.
Okay, Doc. I'll get those two things out. I'll hunt down the payment schedule, and I'll get that to you, Sue, and then I'll send through the link on the superannuation withdrawal thing as well.
I've got one more question here. The employees usually earn less than $1,500.
They get the $1,500.
So, but do they need to pay them the
$1,500? You have to pay them the $1,500, and it
for
means
them
that,
to get that.
yes.
Will it, if you're not paying them the $1,500, will it be prorated? So if you're only paying them, if they're only earning $1,000 a fortnight, will that be?
My reading of this is that you are expected to pay the $1,500. I think if you were, in other words, if you were paying them $1,000, you think, oh, I'll pay them $1,000 now, and then I'll pay them the other $500 when I get it from the ATO. I think that you would probably be in strife on that one. In other words, I would be absolutely erring on the side. My reading of it is that you will have to pay them $1,500 a month, a fortnight.
Yeah, so Helen's just asked again. So my question is, when does the $1,500 need to be paid by? It's each fortnight.
Each fortnight.
Need to be paying it.
Yeah, that's certainly the way I'm reading the situation. Yeah. Okay, so you don't have to pay it on a weekly basis. It's the fortnightly.
Yeah. Okay, I think we're at the end of our questions. I'll just give it another couple of seconds, make sure we've covered everything else. And Helen's just said, is this starting 30th of March? Yes.
Well, it starts the 30th of March for the March payments. That's the way it reads. Now, I've had a few people send me some text on that. Once again, I'll check that. And this is where the payment schedule out of the Act will describe that. So I'll go back and check that. But it's pretty clear to me that it's the payments are for March. It starts the 30th of March. That's the way they've worded it.
Okay. Yeah. Okay. Yeah. We're all a little bit confused by that one, Helen. Helen's just said, I'm really confused by this. And I'm like, yeah, we're all a little bit confused by that.
You always get this in legislation where you get these interesting interpretation. What does that actually mean when you read it in isolation? But it's completely clear to me. It's March, April, May, June, July, August. 6 months it's available. Whoops. 6 months. There, I have to get an extra one. 6 months it's available, starting in March. It starts for the eligibility comes from March the 30th, but it's for all of March. That's why you have to report the number of people who are working for you as of 1st of March.
So Serena's just said the first payment is from the 30th of March to the 12th of April. So that's the 2 weeks starting from the 30th of March. So that doesn't cover March though.
I'll
yeah, you're going to double check that one for us.
I'll get the schedule.
Yeah, thank you. And it's just said, as a sole trader, I get paid for March by the 15th of the following month. So she gets paid on the 15th of April. So
no. the payment will come through in the first week of May.
Yeah, so that's no, as a sole trader, she gets paid by her clients on the 15th of April. So, Annette, my question is when do you invoice your clients? Do you invoice them in April? For that? So you've just invoiced your clients at the end of March. Yeah, so she invoices her clients on the 1st of the month and then gets paid on the 15th.
By the clients?
Yeah, by the clients. So I suppose then it depends on how you're paying yourself.
Well, in other words, what's the proof of this thing? So in your GST declarations,
are you monthly turnover?
Yeah, are you declaring your GST on just a cash basis, or are you declaring what your invoices are as well?
Or on accruals? So yeah, Mary Jo's just popped on here. It goes on BAS lodgements, so cash or accruals. So I hope that helps in it.
That's the BAS statement is the key evidence trigger that the ATO is using.
Yeah, so the first two payments are paid by the ATO on the 14th of May. So that would mean that the 30th March to the 12th of 30th March to 12th of April, and then the 12th of April to the.
No, so it'll be you'll get the $3,000 for the March period will arrive in the first week or by the 14th or 15th of May.
Okay, we'll double check those dates anyway. That's something that we'll actually send out.
Yeah.
Okay. I think that is a wrap, you guys. Any other questions before we disappear? We did well, Ken. That was right on an hour. I thought it was going to go over.
A good meeting is a fast meeting. Yeah.
Definitely. All right, you guys. Well, stay tuned. Stay tuned to the Self-Employed Australia website, which I've sent the link for that as well. And also stay tuned. We'll actually send out this webinar recording to all the registrants as well, so you can actually have a re-listen and a replay. And I'll also make sure I include any updates as well from this. So we'll double confirm that March period / April period / when that's paid, etc. And we'll really do some clarification around that. And you also said you were going to send something else to
the superannuation. If people want to access the early superannuation, I'll send the link that was available this morning.
Yeah, that's fabulous. And I think, Lisa, you were after that. I'm sure there were a few other people as well. So feel free, stay in touch, you guys. Share, once we send this out, feel free to send this to whoever you think would require, wants to know the information as well. Share it far and wide, and we just really want to get the information out there. Okay, you guys. Thanks so much. Ken, thank you again for your expertise. I really appreciate it.
Good to chat. Catch you.
Bye. Bye.